Hi guys, and welcome to this video tutorial about how we use or how the signals works. So in this video folks, I'm going to explain you a little bit how we work here in our group and how actually the signals works like. Okay, so these videos are actually for people who's just getting started and he wants to know some basic information about how to execute the trades and what the trades are actually. So basically, to get started, the signals are basically entries that the market is giving us into different times in the day, and those signals are basically trades that we normally are trying to find out, and when we find it out, we try to trade them. So basically, let's say for example, you are trying to catch up with the good trade, and you find, for example, an opportunity in the Australian versus the dollar. So the Australian is basically the base currency, and the USD is basically the currency that's getting supported by the Australian and by the dollar. Okay, so those two differences are basically giving us a pair. So there's an AUD, an Australian, okay, and there's a dollar here. Okay, so how much we're exchanging in between the Australian to the dollar. So in order to get $1, okay, you need 0.71 cents of Australian to get $1. So $1 is basically 0.71, okay, in terms of the Australian base currency. So this is the base currency, and this is the currency that we are trying to equate, or trying to find the differences in between when we are trying to do an exchange. So every currency have an economy based on, and in this economy, basically, if you are traveling or you are from Australia and you need dollars, you're gonna give 0.71, and they will give you $1 for every 71 pennies that you have in Australians. Okay, so this is basically some basic information about how this actually works. So what we try to do here is we need to find a good entry. So basically, the signal is when we find a good opportunity if the price fluctuates every single time. So we find, for example, an opportunity over here when we have a resistance line, or we see that the price is actually in this area here, and he was not able to break above this level. So at that time, we see this as a good opportunity, and what we try to do is we jump on into this trade finding a good entry. So for example, let's say this is the trade that we're looking for, and we find an Australian versus the dollar in this good zone area where we can expect the price to go back. Okay, to go back basically is to go towards selling opportunity. So that selling opportunity is what we send normally as a signal in our group, and we send it with some kind of numbers. So this is the number that we trying to find out. This is the number 0 to 71,905 is the price of entry. Basically, is the price that we are trying to find or trying to catch up the trade with. And this kind of numbers, they change in different ways. So basically what we try to look for is a good opportunity where we can risk one, okay, and we can take 2 times what we risk, 2.5, or even 1 to 3 is the best option we can get. So let's say, for example, in this trade that we are looking for, we're going to make a sell in the area that I told you. Okay, so this is the resistance line. So our risk is basically calculated at this area, and our benefit is basically, let's say this is our benefit. So from this level to this level is all of our benefits. So if you check this little differences that we have here, you can look at that there is maybe to 2.5, somewhere like this, okay, as a risk reward. Basically, the risk reward is when you're risking 30 to get 60, to get 90, to get 45. Okay, so depending on each numbers that we are risking, so we are risking 30 to get 60, that means we are trying to get for 1 to 2. If we are trying to get $90 in return, that means we are risking 1 to 3. Okay, And when we are risking 30 to get 45, actually we're not risking that much. We are getting 1 to 1.3 or 1.5. Okay, so this is not really the best option, but the best options obviously are those two options that we have here. So we risk $30 as an example, but it will be depending on the size of your account, but we will be explaining you later on in the next incoming videos what that means actually. But let's say this is actually an opportunity that we find out in this graph that I give you here. So we explain you in the graph what is going to happen and when we're going to enter, where is our risk. So you can see in this box here, let me show you in this box here, you will see the risk that we are risking. So this gray zone means this is the risk that we are taking and this is the return that we can try to get. So basically that is the information that I'm trying to catch up with you guys here. Okay, so to get started, you can see when we send a signal, we give three type of things. So we have the stop loss. The stop loss is basically the number if we was wrong. So I was telling you about the resistance lane, but we expect the price because we are expecting the price to go down. But what happens if the price goes over that level and he breaks above this level and he starts to go up? So we are wrong. That means we are losing money. So when we are losing money, we need to put a stop loss or an amount of cash that we are risking. So let's say we are risking 30. So if the price goes to this area, we're going to lose $30. And if the price goes down, we're going to start making 30, we're going to start making 60, we're going to start making 90. Okay. So this is basically how this works. It's so simple. So when I'm sending a signal, I will give you the stop loss. I will give you what is the entry. Actually, I'm sending a sell signal, so that means there's two directions in market. There's a sell or a buy. So when I'm telling you have to sell, you have to follow up what I'm telling you. If we say a buy, that means you have to follow my trades when I'm buying. So that means I'm taking the Australian dollar for myself and I'm sharing this trade with you guys, so that way you can follow up my trades and you can do the same trading as me. So basically, I will give you also the number of stop loss and I will give you the number that you should enter into this trade, where I'm going to explain you later on. Okay. Also, I will give you the numbers of different take profits. So we'll be also explaining how you can put your lot size, or you put the number of lot size that you need to take each one of those take profits in the best way that you can do it. Okay, so I'm giving you different numbers where you can take profits. So take profit basically is when you're taking, okay, when you're taking a profit. Okay, so if I'm sending you take profit number, that means if the price was, as I said in the explanation, I will be giving you different levels as take profit. So let's say this take profit number here means it's the last one. So let's say this is the third, this is the second, and this is one. Okay, so the one number, it will be here, the number two, it will be here. So I'm expecting the price to go over the number one. You will be making $15, for example. If we go over here, you will be making 13, and if we go here, we're gonna be making 60 or 90. Okay, so that is basically what it means. Different take profits, different profit that you can make from the signal. So when I'm sending you that kind of stuff, that means if the price starts to go to that direction, you'll be making some amounts as an example. So let's say we are risking 30. Okay, so if we get to this level here, we're going to lose 30. But if we start to go all the way down following the sell signal, because it's a sell, so we expect the price to go down. So if the price starts to go down, we will be making 15, 30, 90 to 60 if we hit the third take profit. But you know that you should trade most of those take profits. You should go at least till the take profit 3. But if we fail to not get the number take profit 3, let's say, for example, we hit the take profit 2, the price fluctuates and then he starts to go up. Okay, that means we should start taking all of our profits and we'll be making 15 or 20 or $25 instead of 30 or $60. Okay, so that means if the price starts to go in the opposite direction, we should start taking some of the positions into different take profits numbers that I'm sending you. I will be explaining you all of that in the next coming videos, but no problem. I will be showing you here an example of exactly this trade that we have in front of you. So now we're gonna jump into the MetaTrader 4. I guess you already have MetaTrader 4. So the first thing you need to do is you're going to click here. You need to add all the symbols you're going to trade. So for example, you trade Australian CAD, you trade Australian GPY, CAD GPY. So you start adding all of those different different pairs into your list, because those are like saved. This is like a carpet where you have all of the different symbols or different pairs that they are not being used from with your side or from your side. Okay, so we're gonna start adding all of those, and we say okay. So now all of those that we added, they are here in this list. Okay, so now every single time you want to trade something, you're gonna click on this first option, and you're gonna find. So what we need to do now is we need to find where is the Australian dollar. Okay, so you can see here we have the Australian dollar. This is the actual number. This is the number that it's in between the sellers and the buyers. And you know, when the market is actually based on sellers and buyers, and between the offer and demand in each one of the side of those guys who's trying to buy and someone who's trying to sell, this different demand and offer is creating what we say bid and ask. So when the bid and ask is really high, that means the 838 is different than 841. So that means there is people who's selling, okay, and he's trying to get this number, okay, and the people who's buying is trying to get this number 84, and the people who's selling 83. So this is simple thing. This is just for spread. So the spread means between this number and this number, there is only a spread of 0.4 pips. Okay, 0.5. You see that numbers, it changes every single time. So now let's go and get started. So first thing you need to do is you're gonna click here. You're gonna click on the first option, new trade. And now we're gonna use the numbers that we have in the screen, in the left side, the right side, sorry, of the screen. So what you need to do now is you need to follow up this signal. We're gonna enter at 71,905. You can see that the number actually is lower than the price of entry. So that means we are a little bit late to enter this trade. But anyway, as the trade is already activated, that means we need to jump right now into the trade before it gets too late. So first thing we need to do is we're gonna put the stop loss number. So here you have the stop loss number is the red zone, and here you have the take profit number. It's the green zone. So the first thing you need to do is you're gonna put the stop loss numbers. So the stop loss numbers is actually this here, SL. So that means stop lose, okay? And it's 72, 373. Okay, so 72, we're gonna add 373. Okay, and now we're going to add the different take profits. So in this scenario, let's say we're going to trade 3 of them. We're going to try to open 3 positions because we want to trade 3 times this trade because it has 3 different take profits. It's not the best thing, but anyway, I'm just explaining you a little bit how this works. Later on the next videos, we'll be explaining you how to trade 3 times without risking that much. Okay, so we're going to change, we're going to change the take profit. We're going to put 71,568, which is the first number of take profit. We're going to also change the number here because we think that the risk is too high, because we're going to open 3 positions that is going to take us 0.03. So let's say we want to open this position. Okay, we're going to open a 0.01 for this one, and we're going to click on sell because we don't want to buy, we want to sell. So in that scenario, we only have to put these things, okay, clearly see if everything is right, and then we click on sell. When the sell is over, it will open you this window as it just saw it before. And now your order is open actually. This is the running order. Now you can see the take profit is here. The stop loss is actually here. If you don't like any of those numbers, you can just click, maintain the click, just not clicking, okay? This is clicking. I want you to maintain the click, and then it's gonna open you this window. So you're gonna click on modify order, and then you can change any of those numbers. Once you change something, let's say we change the 847, it will say modify. So now you can modify this one. Now it's modified, okay? And this is actually how this works. So now let's say we want to open the rest of positions. New position, we're gonna go here, we're gonna go for the next take profit, which is the second one, 71,070. Okay, 71,070 as a take profit. Now we're going to put the same stop loss for each one of them. So it's 72,373. Okay, and now we're going to click again sell. And now we're going to open another one. So you can click, for example, here and you say new order. So you open a new order. It's easy for you without going back, and you put 70. Okay. We're going to change the numbers. We're going to put 780, which is this take profit level here. And again, the same stop loss, 373. So now you have the stop loss, you have everything right, and you click sell. So all we have right now is the currencies that we have, or the pairs that we have open. It will be appearing in this place here. If we decide to close anything, we just have to click here, close order. I will never recommend you to close an order if we are not telling you to do it. Okay, so try to follow, try to hold on, wait till you see profits in this different pairs that we trade, and don't never close before it gets to any of those take profit numbers. Okay, just hold on, wait, and then you can decide if it's good time. When you do everything of that explained to you, you don't need to do anything more. You can close, okay, the Steno app, or you can close your phone. Everything is already done. So now you have to do is only wait for the take profits to hit or the stop loss to hit, and then you can open again and see what is the results. So let's say we didn't close, we didn't hit anything. So all the positions that you have closed, okay, it will be appearing in this place here, okay. On this, if you click here, is actually all the trades that you done the week, all the trades that you done the month, all the trades that you did today, okay. Different clicks, different ones. All the trades that you did in the last 3 months, for example, okay. So what we want to see is what we did today. You click on today, okay. And if we decide to close, let's say this one hits the take profit, we close it, just an example, okay. And now it will be appearing here. We made 0.02, but actually the commission is 0.02. That means it's really so low, and we did no profit because actually we just paid the commission. I'm just putting you an example to show you how we can find the positions that are closed. Okay, so this is everything for today, guys. Hope you enjoyed this chapter here, and we will see you in the next chapter. For now, goodbye.